While the world is staring at a flickering green candle on a Bitcoin chart, the truly wealthy, the top 1%, are looking in the opposite direction. Don't get me wrong, I love crypto. But have you ever wondered why billionaires like Jeff Bezos or Bill Gates aren't tweeting about the latest moon bag? It's because they aren't playing the speculation game. They are playing the ownership game. They are buying assets that don't just go up, but assets that control the flow of reality. While you're hoping for a 10x return on a digital coin, the 1% are securing assets that are literally unprintable and immune to the volatility that keeps you awake at night. Today, we are pulling the curtain back on the shadow portfolio of the elite. We're moving beyond the hype and looking at what actually builds generational power in 2026. Here is a hard pill to swallow. In every market cycle, there is a group of people called exit liquidity. These are the retail investors who buy the top because they followed the noise, while the elites sell to them and move into quiet assets. In 2026, the noise is louder than ever, but there is a specific category of investment that the ultra-rich are hoarding right now, something that is currently flying under the radar of every major news outlet. By the end of this video, you will understand exactly why the smart money is diversifying away from the digital gold rush and into a sector that is the backbone of the next industrial revolution. The wealth gap isn't growing because of high salaries, it's growing because of asset class segregation. The rich have access to things you don't even know exist, but that's about to change. 2026 marks a tipping point where these institutional-only assets are becoming tokenized and accessible to everyone. If you want to stop chasing the crumbs and start eating at the table, you need to hear this. This isn't just about investing, it's about a total shift in financial consciousness. Let's address the elephant in the room, Bitcoin. Bitcoin is the greatest performing asset of the last decade, and it has a place in every modern portfolio. But for the 1%, Bitcoin is beta. It's a store of value, like digital gold. It's defensive. What the 1% are looking for is alpha, the kind of returns that don't just protect wealth, but multiply it exponentially without the 80% drawdowns. While retail investors treat Bitcoin like a lottery ticket, the elites treat it like a bank account. They keep their savings there, but they keep their investments in assets that have inherent utility. Bitcoin doesn't produce anything. It doesn't grow a crop, it doesn't house a family, and it doesn't power a city. The 1% are moving into productive assets. In 2026, the most valuable commodity on Earth isn't oil, and it isn't even gold, it's compute power. As AI models grow to the size of small nations, the physical infrastructure that houses them, data centers, has become the ultimate land grab. The 1% aren't just buying AI stocks, they are buying the physical buildings, the cooling systems, and the energy grids that AI must use to exist. This is infrastructure investing. It's boring, it's expensive, and it has massive barriers to entry. But here's the kicker. These data centers are signing 20-year contracts with trillion-dollar companies like Microsoft and Google. While your Bitcoin price swings 10% in an hour, these assets are generating guaranteed, inflation-linked cash flow for decades. For a century, the easiest way to get rich was to own a bank. In 2026, with the traditional banking system struggling under the weight of high interest rates and bad debt, a new market has exploded: private credit. Instead of putting money in a savings account at 4%, the 1% are lending directly to mid-sized, high-growth companies at 12 to 15% interest. This used to be a closed club for Goldman Sachs and JP Morgan. Now it's where the old money is hiding. Why? Because in a volatile world, income is king. When you own the debt of a company that is essential to its industry, you get paid before the shareholders, before the CEO, and before the taxman. You aren't gambling on a price, you are collecting a toll. Bill Gates is now the largest private owner of farmland in America. Why? Because you can't code a sandwich. In 2026, as climate instability and population growth put a strain on the global food supply, arable land and water rights have become the ultimate defensive play. The 1% are buying land that has senior water rights, meaning they get the water first, even in a drought. This is the definition of a moat. You are buying an asset that everyone on the planet needs to survive every single day. While crypto enthusiasts talk about decentralization, the ultra-rich are centralizing the most basic human needs under their ownership. Now, you might be thinking, Kim, I don't have $50 million to buy a data center or 1,000 acres of farmland, and you'd be right, until now. 2026 is the year of real-world asset tokenization. Through the power of the blockchain, the very technology that gave us Bitcoin, these elite assets are being broken down into fractions. You can now buy $50 worth of a high-yield data center or a share of a sustainable farm in South America. This is the great democratization of wealth. But here is the warning. Most people will miss this. They will still be chasing the next meme coin or waiting for Bitcoin to hit $1 million, while the real wealth is quietly being built in tokenized infrastructure and private debt. The difference between the 1% and the 99% isn't just the size of their bank account, it's their time horizon. Retail investors think in days and weeks. The 1% think in decades and generations. They don't care about the daily candle. They care about the compound interest curve. To invest like the 1%, you have to stop looking for the next Bitcoin and start looking for the next essential utility. Ask yourself, what will the world have to use in 10 years? That is where you put your money. The financial world is splitting in two. On one side, you have the speculation bubble, high octane, high risk, and driven by hype. On the other side, you have the reality economy, the buildings, the energy, the food, and the debt that makes the world turn. Bitcoin was the gateway drug to financial freedom, but the destination isn't just a digital wallet, it's a portfolio of assets that provide value to the world. The 1% have already made their move. The question is, are you going to keep following the crowd, or are you going to follow the money? If you want to stay ahead of the shadow portfolio and learn how to access these tokenized 1% assets, you're in the right place. At Kim Invests, we break down the math they didn't teach you in school so you can actually achieve freedom. Hit that subscribe button and turn on the notification bell because the window of opportunity for 2026 is closing fast. Drop a comment below. Are you still 100% in Bitcoin, or are you starting to look at real-world assets? Let's talk strategy. Thanks for watching, and remember, don't just save money, build power.